All right, hello, and welcome back to the Broken Business Models podcast. We're your hosts, Ryan and James. And before we get into today's podcast, just a quick disclaimer nothing in this podcast or any of our other materials should be taken as investment advice. James and I could have positions in any of the stocks we may mention today, and we reserve the right to change those positions at any time. So make sure to do your own work and consult with a professional before making any investment decision. With that being said, the topic of today's podcast is going to be plug power. Now, we did our last update on plug power just a couple months ago, where we talked about, among other things, how plug power is rapidly reaching the end of the line. And as expected, they had to do something. And just yesterday, they announced a pretty significant capital raise in order to extend their lifespan as much as possible. So that's going to be the topic of today's podcast. Now, just for those of you who may be new to the channel or new to Plug Power, just a quick rundown of what this company does. So basically, their business strategy is to sell hydrogen fuel cell devices, which are these little devices that take in hydrogen gas and output electricity. They also sell the hydrogen fuel itself at massive losses. They do this because in order to incentivize their customers to buy their fuel cell devices. And they also generate some revenue from the sale of electricity from the hydrogen power plants that they sell. Now, for a variety of different reasons, hydrogen energy is not commercially viable compared to other ways of generating and storing energy. And keep in mind that hydrogen is really an energy storage solution, not an energy generation solution. And because of this, Plug Power makes massive gross losses on all of its segments. Just to give you a sense of just how bad the financials are of this business model, here I have the quarterly revenue and net income of Plug Power over the past several quarters. Keep in mind that the net income is highly variable because of quarter-to-quarter changes in non-cash impairments and things of that nature. But the overall point to get across here is that they make massive net losses on the order of $200 to $250 million per quarter. And that's only on revenue of about the same amount. So very, very bad margins. By 2024, they were starting to get desperate. At the end of 2024, they only had about $200 million of cash, which is about one quarter's worth. So in 2024, they went on several different cost-cutting campaigns. For one, they said that they were going to shift towards producing their own green hydrogen versus gray hydrogen. They said that this would be able to reduce their costs of producing hydrogen massively because green hydrogen, as you may know, is the way of producing hydrogen by using electricity generated by renewable sources versus gray hydrogen, which is produced by splitting apart various types of fossil fuels such as methane or natural gas. So they said that this would massively reduce the cost of their hydrogen. However, as we have explained in the past, this is almost impossible to believe. Shifting to green hydrogen will almost certainly increase their costs, if anything, compared to gray hydrogen. They also said that they're increasing their pricing to customers in order to reduce their gross losses. However, as of the most recent available financials, their gross margins are still highly negative. And just a few months ago, they announced their project Quantum Leap, which pretty much nothing to do with the name, is basically just a mass cost-cutting initiative. So they've done massive layoffs, massive facility consolidations in order to try to extend the life of their company as much as possible. With that being said, we find ourselves here 4 months into 2025, and they're obviously in a desperate financial position. And so their most recent development with their recent capital raise is going to be the topic of the rest of this video. So I'll kick it over to you, James, to talk about what happened and what it means for the company.
Yes, before we move on with that, just a quick reminder to anybody who does not already know, we have a website called differentiatedanalytics.com where we publish premium short selling research. We identify companies which we believe to be fraudulent or overvalued, and then we write professional grade research reports explaining the bear case of these companies. And this chart here shows the hypothetical performance of a portfolio of the stocks that we've written up in our short reports versus the S&P 500. And since we've been doing this since the beginning of 2024, you can see that our short selling portfolio has massively underperformed the S&P 500. So we're very happy with our track record so far. So if you're interested in accessing our premium short selling research, go to differentiatedanalytics.com. The link is in the description below. And for a limited time, if you use the promo code WSM50 at checkout, you can get 50% off the price of the subscription. So yeah, make sure to check that out. Link in the description below. So now on to the video. As Ryan explained, Plug Power was running out of cash, as they frequently are. So just just a few days, actually just yesterday, they put out this press release saying Plug Power signs $525 million secured credit facility with Yorkville Advisors and reports strong preliminary Q1 2025 results. And this sounded very good. The title of the press release sounded very good. So this resulted in a massive increase in Plug Power's share price. So as soon as they announced it, the share price increased, I think, as much as 40% at the peak, and it ended the day up 25%. So investors as a whole were clearly, very positive about this development. So let's dig a little deeper and see what exactly this $525 million credit facility actually is. So the $525 million credit facility is split up into 3 tranches. So the first tranche has a face value of $210 million. However, it was issued at a discount. So while the face value is $210 million, Plug Power only receives $200 million of net proceeds because it's issued at a discount. And they say that they expect this first tranche to close on May 2nd, so just a couple of days from now. And then there's also a second tranche that has a face value of $105 million, but that's also sold at a discount. So Plug Power only receives $100 million. And the first 2 tranches, Plug Power claims, are already agreed. But then there's this third tranche for $210 million. However, the third tranche has not been committed to, and the lender, Yorkville Advisors, is not obligated to actually lend this third tranche. So the third tranche is really just an optional thing that may or may not even happen. So if you look at the actual amount of money that Plug Power is guaranteed to be raising, it's only $300 million. So when Plug Power says, 500, they, in their press release, they want to put the biggest number possible. So they say $525 million. However, you have to look at the fine print and see that the third tranche is not even guaranteed. It may not even happen. So the actual money that they're guaranteed to get is only $300 million. Now, this is structured as a loan that matures in the May of 2028, and it carries an interest rate of 15%. So this is a very high interest rate that Plug Power is going to have to pay on this loan. Additionally, Plug Power will issue warrants to Yorkville to purchase 31.5 million common shares of Plug Power stock. So there's also a dilutive aspect to this financing as well. So Plug Power is going to receive $300 million. However, 60 million of that is going to be immediately used to repay an existing loan that they already had. So that $300 million, so they're borrowing $300 million, but immediately 60 million is going to paying back an existing loan. So they're really only getting $240 million of actual cash they can use to fund their operations. Now, in addition to announcing this new loan that they got, Plug Power also reports what they call strong preliminary Q1 results. Well, were these results really strong? Let's have a look. So here we have a chart over the past couple of years showing Plug Power's revenue in blue and then their free cash flow in red. And this last quarter here, Q1 2025, this is based on the preliminary results that they just released. And we can see that the revenue has actually declined significantly versus the prior quarter, while their cash burn has decreased a little bit. So the reason that Plug Power says that this is a strong result is because their cash burn decreased slightly. However, their revenue also decreased massively. And one of the reasons why this is likely the case is, as Ryan explained towards the beginning of the video, In an attempt to improve their improve their margins, Plug Power has started increasing the prices that they charge to their customers for the hydrogen fuel. Now, hydrogen is not an economically viable fuel source. So the only way that Plug Power could convince any customers to buy the hydrogen fuel is to basically subsidize it and sell it at below cost. Well, obviously, if Plug Power is selling it at below cost, they're incurring massive losses. So in order to try to ameliorate, in order to try to reduce those losses, Plug Power has been increasing the prices it charges to its customers. Well, what happens if you increase the prices to the customers? Well, then it's no longer worth the customer's while. The customer is going to say, okay, if you're going to increase the prices of the hydrogen, I'm just not going to use hydrogen, and I'll use alternative fuel sources, which are more economically viable. So by increasing the prices, Plug Power is losing a lot of customers, which explains the massive decline in revenue. So the actual fundamentals of the business are not really improving. Hydrogen is still a completely unviable fuel source. Now, they are basically reducing the size of the business by raising prices, thereby losing customers, as well as doing massive layoffs. So Plug Power as a company is shrinking, but because they're shrinking, their losses are also shrinking. But this is not a sign that they're ever going to be able to build a viable business. So they call these strong Q1 results. I don't see anything strong about these results. This is just a dying company that is, desperately trying to cut costs just to survive, but their losses are still massive and their cash burn is still massive. So now let's look at the specifics of their liquidity situation. As Ryan explained earlier, they had about $200 million of cash at the end of 2024. They did raise some capital during the first quarter. So they now say that as of March 31st, 2025, they have about $300 million of unrestricted cash. As we explained earlier, they raised $300 million from the financing transaction. However, $60 million of that had to go to paying off an existing debt. So their total liquidity has increased from $300 million up to $540 million as a result of the recent borrowings that they just did. So how long will this $540 million actually last them? So in Q1, they burned $142 million of cash. So if you annualize that, they're currently burning cash at a rate of $570 million per year. However, there is some reason to suspect that the Q1 cash burn of $142 million may actually be, unsustainably low. The reason being is because Plug Power had a lot of inventory. So at the end of 2024, Plug Power had $682 million worth of inventory. Now, given that they're so focused on reducing their cash burn, it seems likely that they would be reducing that inventory, running down the inventory, not replacing it fully, in order to basically boost their, to make their cash burn look better. So if we don't yet know, we're going to have to wait till they release their 10Q in a few weeks. But if it is indeed the case that they're, trying to reduce their inventory to reduce their inventory to reduce their cash burn, well, that's not sustainable because eventually you run out of inventory. So the relatively low cash burn of Q1 may not even be sustainable. But even if we, just take it at face value and assume that they're going to continue to burn $142 million per quarter, their current level of liquidity will only last them less than 1 year. And the situation actually gets even worse. They have $320 million of loans coming due in 2026. So they're definitely going to need to, raise more capital to pay off these 2026 loans, in addition to their ongoing cash burn just from operating the business. So overall, our opinion of Plug Power has not changed. The company is still a massive failure, and the technology that they are pursuing is completely unviable. And every quarter they're just trying to scrape by, trying to raise some more capital to survive a little bit longer. And they are indeed cutting costs. But if the business is fundamentally unviable, hydrogen is just not an economically viable fuel source, And given that that is the case, no amount of cost cutting or price increases are going to solve the problem, because as we can see with the massive revenue decline in the first quarter, yeah, you can increase the prices you charge to customers, but then a lot of your customers are just going to leave. So it's just not going to work, and the cash burn is still extreme. So I think, Plug Power, the share price, even after the recent surge, is only about $1. Their market cap is $1 billion, and remember, they're burning more than $500 million per year at the current rate of cash burn. So I think we're rapidly approaching the end for Plug Power. I would be honestly pretty surprised if they can survive for another year from now. I think bankruptcy is likely going to happen probably towards the end of 2025 or maybe the beginning of 2026. Definitely when all their loans start coming due in 2026, I really don't see how they're going to be able to repay their 2026 loans. So that about wraps it up for everything we had to talk about Plug Power today. As always, if you have any opinions or thoughts about Plug Power or hydrogen in general, please let us know in the comment section below, and we will see you all on next week's video.